James, FIC revenue at Deutsche Bank has risen by 47% in the third quarter. Has this good momentum continued in the fourth quarter as well?
Look, we're continuing to see client engagement in the business as the environment, as we always expected, normalizes a little bit. But obviously there's still uncertainty in the outlook. There's still events ahead of us, whether it's the US election or Brexit, that causes there to be some volatility in the market and still events. We've done very well, as you say, 47% year on year. And that's been quite consistent over the last 4 quarters. We're up in our FIC business in high double digits. We've basically doubled rates revenues now for 4 quarters in a row. And so for us, the sustainability of these revenues is a key factor, and we think a significant amount of it will stick.
Okay. So has it slowed down a bit in October, or is it at a similar
It's continued a moderation, for sure, but I would say the environment is still supportive.
Okay, that's great. You've beaten your US peers, actually, with the 47% rise, which, according to our calculation, have, on average, 25% in FIC. So where have you actually gained market share on the US peers?
It's actually across the board. I think all of our 4 core businesses in rates, credit, emerging markets, and FX all performed well this quarter. And so we're seeing, I think, as I say, a broad level of engagement by clients with our platform. We've been consistently able to support them with prices. And of course, for those businesses, a big part of it is specific transactions that we can help them on. So it's both a strong flow performance as well as a strong sort of transaction-driven and client engagement-driven performance.
Okay. And if you look at the fourth quarter, and well, it's October, really, the first month of the fourth quarter, how has it started across all of the businesses, and do we already see an impact of the resurgent pandemic?
Well, first of all, in the other businesses, we're expecting stable conditions, more or less, in the fourth quarter relative to the third. So we continue to trade well despite some of the headwinds in the environment. Of course, 2 of our businesses, the private bank and the corporate bank, are fighting through the interest rate headwinds, but they're doing quite well in executing on their strategies and offsetting that headwind. Of course, there are uncertainties, as you say, in the macroeconomic environment, and that is something that we factor in as we manage our businesses, as we manage our risks, importantly. But we remain quite confident in our outlook and the way we're managing through this pandemic. And importantly, as we've talked about consistently, it's supporting clients, supporting the economy, as we all navigate a very, very unexpected, unusual environment.
Okay. As you said, you're managing the risks. How hard would Deutsche Bank be hit if there would be another wave of lockdowns across Europe and elsewhere?
Well, look, we've built in some conservatism into our numbers. We've taken an overlay, as we call it, an adjustment, more conservative in our provisions. And we think that prepares us well for the uncertainties that lie ahead. We're not seeing a deterioration in the portfolio beyond what we expected in this environment. And while we're all, of course, subject to the direction of the economy and potential impact of more sort of distancing and protection measures in the economy, we think the second quarter experiences showed us that the households and corporates are relatively resilient, and governments are in a position to support the economy through this period of uncertainty.
Okay. You, throughout the year, you continue to say that you expect a pre-tax profit in the full year, which most analysts for a long time didn't believe the bank. Now you're at 846 million in the first 9 months in terms of pre-tax profit. So the question now is, how big is the pre-tax profit going to be? Will it exceed 1 billion?
Well, look, we're continuing to work through our restructuring. So this quarter, we had pre-tax profits of almost 500 million, and that was burdened by about 350 million of restructuring and severance charges and what we call transformation charges, as well as a burden from the CRU, the Capital Release Unit, wind down. Obviously, we expect that to continue into the fourth quarter as we continue to execute with discipline on this transformation of the company. But of course, 850 million of pre-tax profit over the first 9 months puts us in a good position to deliver on our objective of being profitable on the pre-tax line for this year.
Okay. And again, in terms of the revenues, the core bank has now a 8% growth in revenues in the first 9 months. So, what does this mean for your goal for the full year? Will you be able to? Will that be in line with what we've seen in the first 9 months? Will
so
it
look, I'll be
8% or more than that.
Of course, cautious about forward-looking statements. We provide some outlook in our earnings report, but look, the core bank generated revenues of 6 billion euros in the quarter, and it's showing a little bit above 24 billion euros in the last 12 months. So assuming the fourth quarter of 2020 is no weaker than the fourth quarter of 2019, we should be in and around that level of 24 billion. What's important, of course, is our continued progress towards our 2022 targets. And as we laid out last December, at that time, in the conditions we expected, our model suggested we needed about 24.5 billion to achieve our ROTE targets. And so being within about 500 million of that target at this point is comforting. We're ahead of our internal plans. And while we're aware there are headwinds in the environment around interest rates and the normalization of the investment bank, we really think we're executing well on our strategy. And that puts us in a strong position to continue to deliver on our financial commitments. I would also add that our expenses remain on track against our objectives. So we've had a steady decline over the last almost 3 years of quarterly sequential improvements and year-on-year improvements. And that's a pattern we need to continue as we manage this company with great discipline.
Okay. Let's talk briefly about loan loss provisions. You've reported 273 million for the third quarter. What will we see in the remainder of the year? Will it be roughly at the same level or different?
So our guidance would be exactly that, roughly at the same level for the fourth quarter. We called very early on for a range this year of 35 to 45 basis points of provisions relative to loans. We've been consistent with that guidance, and as you can see, the third quarter is in line with that. Year to date, it's 47 basis points, and with a fourth quarter in line with the third at about 25 basis points, that weighted average will come, well into the range that we laid out all the way back in April.
Okay.
And it reflects, frankly, a really good handle on our risks in the portfolio, and I want to commend our risk colleagues under Stuart Lewis's leadership. They've had a real granular view of the exposures in the portfolio, how we thought it would perform in this environment, and it's tracked very much in line with our expectations.
Okay. We have reported that you're currently in talks with Tata Consultancy to sell Postbank systems. How are the talks progressing, and are you confident that you'll come to a deal by year end?
Well, we've seen the reporting, and I don't want to comment on things that haven't been publicly announced, but all I'd say really is that we're focused on execution against all the strategies that we laid out in December last year. One important element of our strategy is the integration of the German banks, and that means technology, it means operations. You've seen that we've taken some actions this quarter, announcing further reduction in our distribution network as we deliver on our cost promises. And so across a range of initiatives, we're working hard to deliver on those sets of promises.
Okay. We're nearing the end of the year, so the topic of bonuses creeps up the agenda once again. How much do you expect to pay bonuses for this year? Will you keep the bonus pool overall flat, or will it change in any meaningful way?
Well, look, it's too early to say, of course. And I'd say a few things. One is we've been accruing, of course, to pay variable compensation in line with performance. And that performance, as we've mentioned, has been ahead of our plans for this year. And as a consequence, naturally, we've accrued for variable compensation that is beyond what we'd originally planned for the year. And that's great news. I think a company like ours needs to be able to pay competitively for performance, such as was delivered this year in the year to date. We're mindful of the balance that we need to strike between prudence as we navigate through a very uncertain environment, and again, rewarding people for the strong performance this year. I think one of the critical things, Daniel, in this regard is we have superb talent in the company. We are able to deploy that talent to support our clients, to support the economy, and also to manage the risks of a major bank through an environment like this. And I think it's sensible to be able to protect that franchise by being able to compensate our employees in line with that performance.
So the top performers will be rewarded higher.
That's what we've been aiming to do, and building accruals throughout the year to do. And I would add that, with the capital ratio of 13.3%, as we reported in the quarter, I mean, the prudence of course is measured against the balance sheet strength that we can show and carry forward, and so that's been a critical objective also in our minds.
Yeah. One completely different topic that I briefly like to touch on is Deutsche Bank has made commitments to improve gender diversity at the bank, yet there's only one woman sitting on the management board at this stage. What steps is the bank taking to increase that number?
Well, look, I can't speak to the management board. That's outside of my responsibility. But as we manage the company as a whole, it has a huge degree of focus. In fact, one thing I'll tell you is I'm responsible for managing performance in the company, and that also means scorecards, and gender diversity and goals that we set for gender diversity is on the scorecard. And it means that there's just a focus on understanding what the levers are, how we retain, promote, train top female talent, and do it as an ordinary part of our business, rather than something that is an extraordinary part of the business. We're really proud of the steps that we've taken. We're proud of the social engagement we have inside the company, of which gender diversity is just one facet. But I can assure you it has a lot of attention in the boardroom.